Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. We had more inflation numbers came out this morning with the PPI report. Still hot, still sticky inflation, and we're going to tell you what that means.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. We're running our February specials. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. Okay, so Bob, the numbers came out pretty obvious that, the Fed might actually be right for once and that the inflation is going to be sticky, which is kind of contrary to what this market has been pricing in. So what can you tell us about what we saw today?
Yeah, so we've gone from hard landing to soft landing to now no landing. I think we talked about this a little bit yesterday. And what's happening here is that we've actually reached a trough in inflation for this cycle until we truly get into what I would call a hard recession, not a technical recession. And so all you have to do is really look at energy costs. And going into next month, Phil, the CPI report is going to reflect a 7 percentage point increase in energy costs from January into February. So PPI is suggesting that. And as energy goes, everything else goes. So if you look at this chart here, and if you just visualize that now that you've seen we kind of troughed here, and remember energy's been kind of flat since I would say September, October. They've been manipulating it through financial mechanisms like release of the CPR and futures contracts and what other jawboning they like to do. And they've also been pretty fortunate that on the natural gas side, the winter in Europe was, I guess, as expected. It wasn't very, very cold. But that's changing. I think we're going to have a cold spring. And so you're starting to see this move higher. And one of the first things that you saw was the oil tanker started to move higher. And people need to check those out. Those public companies are all doing really, really well. So now we have a trough in CPI. And that's going to bring the Fed into a position where it's going to be higher for longer. And I wish I would have brought this other chart out for you to show you that 1 month ago, Phil, the reason why the stock market went straight up was because everybody anticipated that we'd be pausing in March and we'd be cutting in June. And now, and you and I, our position has always been the short-term futures contracts are telling us the pause won't happen till at least June and the pivot won't happen till at least September. And I think we're going to be vindicated in our view because, this next chart I'm going to show you is the reason why the Fed's going to keep raising rates. And the deficits are accelerating. And so he has no choice but to look firm into this environment. If he doesn't, then you'll see an acceleration of inflation in this country that would become extremely uncomfortable really fast. It'll outstrip people's ability to pay for it. We have a situation now where 60% of the population now is from 40 to 60% are going to go onto fixed income. And you have an inability to manage inflation that way. And so the Biden administration is on one hand trying to shove more transfer payments into people's pockets, but Powell's taking it away through higher interest rates. And eventually Powell will win and inflation will overwhelm people and they will have very little ability to pay for this unless we just let the dollar fall. And that has a whole new set of problems for us. And the next chart I'm going to show you is that Biden was just bragging at State of the Union that, he basically has deficits under control. Well, here's the outlook for the rest of the year. Does that look like it's in control to you, Phil?
No. And they can talk about getting the budget back under control. But I mean, lately that's just been all talk, we haven't seen that corralled in many, 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 many moons.
Yeah, we also have a situation where they can't say that they're under tax because 18% of GDP now is going for taxation. The problem is that we're spending at 21% of GDP.
That's the problem.
So you can't say we have a tax issue anymore. We have a spending issue. And I don't know if the spending issue is easily solved because it's going to be more and more transfer payments coming in. So
right.
It's going to be really interesting to see how they solve this. And I don't think they can, not with conventional thinking. I have my ideas, but I doubt they'll listen to me because they make sense. But I think we're in a situation where I think we expect inflation to accelerate. And guys, that puts us into a 1970s kind of environment. So I would encourage you to dust off what happened to the stock market in the 70s. And the reason why we're long energy in our group, we're long, Bitcoin in this environment, and we're short technology in this environment, because you're going to have to stay ahead of the game here in terms of you have to outrun inflation, in other words. So that's what I want to talk about today, Phil. And also the market's reacting. It's kind of puking up a little bit today because it tasted it. It doesn't like what it ate with PPI. And I think people are now realizing that, this isn't going to be easy peasy. We're going to pause, pivot, and we're back to Goldilocks. Goldilocks now is lost in the forest.
Yeah, no, I agree. Like you said, we saw the Fed funds futures reverse course, right? When we thought that was odd too, that they were thinking about cutting, because if they were right, actually that would imply like we were diving into a recession. I mean, why else would they cut back then? But we didn't really see it. Now they've reversed on that. I guess that's basically because of what the Fed comments have been in the last couple of days with the Fed speakers coming out. But another thing to keep in mind too with this market is that you are running into a situation where it's more expensive to be here at 4,100 SPX, a lot more expensive than it was to be at 4,500 SPX back last 2021 because of the interest rates. So it makes it that much harder, on top of the fact that the Fed is actually tightening and rolling off their balance sheet and not doing any bond purchases, right? So you had cheap money, you had Fed pumping the market. Now you have the Fed unpumping the market, and you have expensive money. And so that's why I think people are being too complacent here about this market's just going to rocket back to the previous highs, because the headwinds are much, much greater now than they were back then.
Yeah, and tomorrow, if we get a chance, I'm going to digest a research report that came out that's basically talking about what's happening in this environment where they're pumping calls every day for the same day expiration, and how that could turn from a virtuous environment to an absolute nightmare.
Right.
If I could boil it down enough so I could explain it, first of all, for myself and then to you, I think it's pretty eye-opening. What I've read so far, it's kind of scary, because you just never know where they're going to unplug the drain. It's really so dynamic and so random that I don't think you can front run it. You have to either be positioned for it or you're going to be caught up in it. So stay tuned to that. Tomorrow should be a pretty interesting podcast.
Yep. All right, guys. Well, that's going to do it for this edition of the Trade Genius podcast. Thanks for watching. Check out our specials on our website, tradegenius.co, and we'll see you on the next episode. Take care.
Trade Genius.